This really lasts. Bringing Lindsey Piegza, chief economist at Stifel. Lindsey, it's great to see you. Thanks for joining us here on Worldwide Exchange.
Thanks for having me. Good morning.
All right, you tweeted out, I think, or put in a note somewhere, maybe it was a smoke signal or a pigeon or whatever. It said basically earnings are greater than tariffs or trade. Why do you say that?
Well, at least for right now, it does seem like the market is focusing on this very positive stream of earnings, pushing to the side some of the concerns or the concerns that we should be seeing in the marketplace regarding this ongoing trade war. Right now, I think the market is very much cherry-picking, looking for some positive indications that this recovery will be maintained. But I think the market is very much ignoring these risks that we do face, downside risks for the economy, if we continue down this pathway to an outright trade war with some of our key trading partners, particularly China.
Do you think it's going to happen? What are the odds we do go to an all-out trade war, Lindsey?
Well, I don't know if we're going to get to that point, but I do think that we're going to continue to see this administration engage in back and forth retaliatory penalties, which will add up and have a cumulative impact, a negative impact for the U.S. economy. Now, thus far, the penalties imposed are likely to shave off maybe a couple of tenths of a percentage point from top-line GDP, but we certainly don't want to continue down this pathway. We're still talking about an economy that's bouncing around 2.5%-ish growth. Yes, we did see an above-trend activity level in the second quarter, but on a longer-term basis, we're still at this 2.5% pace, so we certainly can't be giving away tenths of a percentage point in any means.
Are we at peak earnings?
I do think that we are. I think from here we're going to start to see a slowdown in momentum. I think the U.S. economy has been bouncing along reliant on some temporary factors, particularly when we look at the consumer sector, relying on drawing down savings, ramping up credit. We haven't seen the meaningful gains in income that are really going to be needed to talk about a sustainable consumer sector. And as a consumer-based economy, if we don't have a happy, healthy consumer, it's going to be difficult to maintain even this 2-ish% growth, which is going to translate into maybe less optimistic outlooks.
Quickly,
for earnings.
If we're at peak earnings, are we at peak markets?
Well, that's not necessarily the same thing. I do think that for risk assets, we could continue to see a little bit of a run-up as we see companies buying back stock, reducing debt. But longer term, if we don't see fundamentals improve to justify the levels that we are seeing in the market, I would expect a sizable correction.
Lindsey Piegza of Stifel. Lindsey, have a good time in Nashville. Thanks for joining us.
Thanks very much.
All right.